Are you tired of identifying the perfect moment of when you should buy your BTC or other crypto assets, and you are still trying to make better returns over the long time frame over the people that are dollar cost averaging into the markets? Today I will show you one simple indicator that you never heard for, and that historically estimated market bottoms probably the best so far, and a few things that I like to use in a confluence with that indicator in order to get great buying prices. Hello everyone, my name is Željko and welcome to CryptoGrid. Why identifying the market bottom is even important? So many people join the markets, whether it's crypto, stock market or something else, make some mistakes, fail, and after some initial research, they start DCAing into the market since this was an easy and a proven strategy over a long enough time, because when you look at the macro picture and a long enough time frame, you can see that the price have an upward trend in general, and the earlier that you start investing, the better you would be. This applies if you invested in Bitcoin, this applies if you invested in S&P 500, and this applies even if you invested in gold. So also, I'm always saying, since you can't predict the markets and at any moment the trend can change, you should always be positioned in a way that wherever the price goes, that you can take some profits. The easiest way to get an edge in the markets in comparison to the people who are just DCAing, or even worse, who are trying to predict the markets, is to know where the potential bottom is. This will help you in a way that you know once you get into that range, you shouldn't be holding a lot of cash, and it is a great time to accumulate more assets, and it will help you mentally to not get into the temptation of selling while you're hearing a lot of negative news everywhere, and when we are actually close to that market bottom. If you look into the charts, one of the indicators that was reliable for identifying market bottoms was 200 weekly moving average, and if we take a look into the chart, we can see that we pretty much held greatly here. We had some small wick below it, here we held again, here we held again, but when this bear market occurs, this is the moment when we actually fail. So another area that people considered as a great indicator after the 200 weekly moving average failed is a 300 weekly moving average, because this week at March 2020 pretty much went to that area. But still, if you look into the previous market bottom and the moment when FTX collapsed, we went below it. So we can speculate that this was just deviation in the market because of the bad event that happened. But still, this indicator haven't worked during that time. So now people are considering looking at 400 weekly moving average, but it's not something I would consider. So let's look into the indicator that actually works. In my opinion, this is one of the most undervalued indicators, and if you go into look into bitcoin.com website, you can find this indicator for free. It's called Bitcoin Balance Price, and no, it's not paid ad, I just like this indicator. So if you compare it with the Bitcoin price, you can see that it held pretty much everywhere except pretty much at the start at 2011. That's the only moment when this indicator failed. And if you want to know what exactly it represents, it's calculated by subtracting transferred price from the realized price. Transferred price takes the sum of coins days destroyed and divides it by the existing supply of Bitcoin and the time it has been in a circulation. The value of transfer price is then multiplied by 21. Remember that there can only be 21 million Bitcoin mined, and that's the reason why they took a multiplier of 21. Realized price is the cost basis value of all Bitcoins into the circulation. So if you look how it held, as I said, this is the only moment when it failed. If you look into this area, we felt maybe like 10-20 bucks in this range. If you look into the 2018, we pretty much held at that area, and if we zoom in, we can see how these prices are actually super close. So again, we maybe failed below it for maybe $100 or something like that, but when you look at the percentage value, that's miserable. And this is the reason why I mentioned that you should always stay at least some amount of money in USD, because you always want to have some cash in case of the price dropping lower. And the one impressive thing is, I think that there isn't a single indicator that got this accurate prediction about the FTX collapse. Is if we zoom in, we can see that we pretty much held that area. And now we can say if we're gonna go up or down, but currently we are pretty much holding around 15K when it comes to the balance price of Bitcoin, so it's highly likely that we won't go below this line no matter what macroeconomic situation is, except something really ridiculous happens. And if we would even get downward trend again, and if we would get to this area, this would pretty much be a double bottom, as we had a double top during the previous bull market. One of the things that I like to use in Confluence with the Bitcoin balance price is to look at the drawbacks from the market stops. And if we look into the first bull market at 2013, we had 86.9% drawback until the bottom. The next time, like from the market top at 2017, we had around 84% drawback. And this time we had around 77.6% drawback. As we can see, we have like diminishing drawbacks over time on a similar way as we have diminishing market tops as well. And this is something that's realistic. You expect to see a few percent less each time. I expected this time to see something in a range between like 75 and 85, and we pretty much got into that area. This is something that can easily be seen on a chart. Some people try to overcomplicate it and to use some really advanced things to try to predict this. You need to be aware that you will never be able to estimate the exact bottom or exact top, but you can pretty much be close to it. And either way, I suggest you to always to DCA into the markets and to DCA out from the markets, because if you try to buy it all at once or sell it all at once, there is a possibility that you never get an entry, or that after you get an entry that the price keeps going down, so you will experience a big drawback on your buying prices. Same happens for the top. If you try to sell all at once, it might never get to the area where you want to sell it, and the price might start reversing too much, or it might just continue going up. So another indicator that I like to use in Confluence with this is the Bitcoin predicted funding rate. And as you can see, the market bottom this time, we had a huge negative predicted funding rate. And in general, if you look into the daily chart, usually when we get areas of a larger negative predicted funding rates, those were the areas that was a good moment to buy Bitcoin actually. There were few situations during the bear market where it wasn't so great buying opportunity. It was solid, but not that perfect. But when we are in an upward trend and you get negative funding rate, this is really awesome. For example, if you bought here, or even if you bought here. Sometimes I like to look at RSI and a few other indicators, but don't try to overcomplicate this. Having a clear mind and not being biased based on your position, like if you bought a lot of crypto and the price continues going down, or if you sold a lot of it and the price continues going up, you should always be ready to rebalance your portfolio based on what market gives you. Make sure to keep an eye on this. I will never go 100% in, but if we ever get close to these prices, I usually aim to get around 95% in. So I hope that you like the video, consider subscribing and joining my Telegram. If you have any questions, you can ask them below since I answer to all of them. Thank you for watching, stay strong and healthy, bye.